Hello, everyone. Welcome back to How to Trade and Switch Markets. I'm Shane Vernier, and this is going to be the Federal Reserve Scandal Watch. Today, we're going to talk about Jay Powell and what exactly is going on in Washington, D.C. Huge news cycle. I mean, I can't even follow it all. I've been watching. I've been looking at odds on certain indictments. I've been looking at all sorts of different things. We're looking at the markets, and to think that this isn't spilling over into market sentiment is a bit naive. Now, I'm not going to spend all day talking about, what scandals or what could possibly happen. But we have three big ones in Washington, D.C. right now. And believe it or not, they're all connected. Number one's the Epstein. We're not going to talk much about the Epstein other than the DOJ is going to go ahead and send the deputy. The deputy of the DOJ is going to go meet with Ghislaine Maxwell in jail. I don't know what that's all about, but I can tell you it's a new development, and it has to do with the Trump-Epstein issue. Then we have new reports surfacing against Obama in election tampering, and these are very serious. Trump actually just about 20 minutes ago called for indictments of previous administration officials. This is big. And then also you've got Jay Powell. Jay Powell made comments earlier today, and he is under criminal referral. We've got Scott Besson of the Treasury coming out saying, hey, maybe Jay Powell doesn't need to resign just yet, but we have odds, we have possibilities. We have a firestorm going in Washington, D.C., and typically when you see this many moving parts politically, it does spill over to the markets. Now, is it really going to be a huge market mover? You bet. Uncertainty moves markets, and if we start to see indictments at high levels, if we see a Jay Powell resignation potentially this week, which the odds are definitely against it, I think it's possible. I really think it's possible, but we got to wait and see what happens here. But this is scandal season. There's a lot going on. As far as politics, I know it makes most of us tired. It makes my head hurt. I don't understand most of it. But I do know what it does to the markets, and it can shake them up in a big, big way. So we've got a full slate for you today. We've got some trade ideas that I do want to recap. We put out our Switch Markets pick of the week, and it had all to do with crypto. We talked about Ethereum. We talked about Bitcoin and Dodgecoin. So I definitely want to recap one of those ideas. One of those trade ideas was Ethereum. We put that one out yesterday as well. Also the yen. We got a message earlier today from a client inside of the How to Trade trading room, and it was on, hey, Shane, why is the yen starting to march against the majors a little bit? Interesting stuff. We had a 4-hour 920 EMA crossover trade on the dollar yen. There was absolutely money in the bank. So we're going to go ahead and look at the yen as well. If there's any markets at all that you'd like to look at, now is a great time to put them in the live chat. I'll be sure to cover them by the end of the stream. I'm looking across my big board right now. I just don't see much. Now, that's not to say that it's not there. We've got gold sort of on a rally. We talked a lot about gold making a run at 3,500. That's developing. That's happening. I think that that's absolutely indicative of what's going on in Washington, D.C. There's no question about it. To me, that's prima facie evidence. When we start to see traders dive into safe havens, something's up. And this news cycle is no joke, guys. So if you're trading, happy trading. I've been a little bit more conservative this week than I've been in a long, long time. And a lot of it's because the price actions whipsaw, and we're just not seeing directional moves. So I'm good to see everybody back in the room. Let's see over there in YouTube land. Yes, sir. Good to see you. Yes, sir. Ikene, good to see you. Ikene, T Marina. Ha, scandalous day. There's scandals everywhere, T Marina. An immunity deal? Yep. Bobby Bob, good to see you. Always a pleasure, guys. I'm confident your trading's going well. I'm confident that there's some good cash inflows coming in. The one thing I'll say about the Epstein thing before we move on, everybody's talking about it. I don't really know what to make of it. I do know this. They're sending a honcho to talk to Ghislaine Maxwell in prison. That means that she has leverage. And that's exactly right, Team Marina. Is there going to be an immunity deal? Maybe if not immunity, maybe something's going to give there. And it sounds to me like they're open for business. I'm watching it closely just like everybody else is. But I'm not a Washington insider. I'm a day trader from Dillon, Montana. I'm out here, and it's funny though. Rupert Murdoch, that runs Fox News or owns it, he doesn't live too far away from here, out there on the Matador Ranch, which is just a huge spread of land. But so there are some heavies around here. You would never guess it, but it's just a small little town in Montana. But they know more about this stuff than me. I know trading, Fibonacci levels, support and resistance. Dre Day, good to see you, Dre Day. All right, guys, let's go ahead and dive in. Let's get started here. Remember, this is the Switch Markets community. It's sort of a fledgling operation that we're building over time here. We're going live on 3 YouTube channels: the How to Trade YouTube, the Forex Signals TV YouTube, and then also the Switch Markets YouTube. We're putting out a lot of videos and content on Switch Markets now. So if you guys are interested interested, you can head on over to Switch Markets on YouTube, on YouTube. Check out the new videos and the shorts. We're putting out a lot of shorts. We've got some new stuff coming. We've got that video probably going to be scheduled up for next Tuesday, and that's going to be your Pine Connector video. You're not going to want to miss that. I think it's going to be a pretty good one. It's going well, Dre Day, going well. I'm feeling pretty good. Absolutely, you're welcome. As far as what we've got today, I want to start out with a trade update here because it's a pretty important one. I think we've got a shot at it. We've really got a shot at it, and I love right now the bullish side of the crypto markets really is sort of where it's at. And what I mean by that is we saw the Genius Act was signed into law last Friday. It really opens the door for stablecoin, really building a huge infrastructure for stablecoins. But all of that aside, what it does is it gets banks officially into the crypto custodial program. What does that mean? It means that they're going to be able to hold deposits in crypto. They're going to be able to facilitate crypto transactions more so than they already do, not just by issuing currency to do so, but maybe just stockpiling their own hordes of crypto and dealing directly with clients. I have to tell you that the Genius Act opened the door for more institutional participation, and that's a very, very big-time bullish thing. That's a big-time bullish thing. So for me, it's just buying dips now in crypto, at least the big three or the big five, whichever crypto you're really interested in. I won't say that it's that good for all of the altcoins. I don't believe in that, but Ethereum's definitely one of the heavy hitters. The Ethereum, we've talked a lot about the Ethereum framework, the Ethereum blockchain over the years, and all the applications with smart contracts and the different things that Ethereum can be used for very, very easily and quickly. And the reality is Ethereum is probably, if Bitcoin's gold, Ethereum's silver. And that's just sort of the way that I look at it. I love buying dips here, though. We had a nice pullback earlier today. I thought we were right in our kill zone, right around 3,500. I'm not giving up on this just yet. If we do get an extension of this daily pullback on Ethereum, I think that you could definitely get that bid from right above 3,500, maybe 3,550. I like that an awful lot. Now, as far as over on an MT5 platform, if in fact you are trading using MT5 with Switch Markets already, congratulations, good. I like MT5. I can't manipulate it as fast as I need to on these live streams. So if you're an MT5 trader, you go, Shane, you got to get on MT5. I go, I'm working on it. We made some videos on it. I'm actually going to put a short out on how to use trailing stops on MT5, sort of an involved type of a video, but it could be something that you guys find useful. This is a good look at Bitcoin. This is a weekly chart on Bitcoin on your MT5 platform, and it's just very simple, guys. I'm looking for good solid levels with good solid market structure to go long on, and right there we were talking about maybe 114, something like that. That's a pretty darn good zone right in here, 114-ish, 114.50. You can see we had a bit of a pullback here, but now we're back on the bull. I just don't really see anything that's going to stop the Bitcoin trade north or that's going to stop the Ethereum trade north. The only thing we really have up there is big round numbers and key numbers, and for Bitcoin, it's all about 125. Ethereum, we're looking at 4,000, 4,500, and 5,000's up next. So we're watching these bullish breaks closely. As far as Dodgecoin goes, if in fact you're interested on your MT5 and you want to go ahead and see if you can get your Dodgecoin, that's how you do it. You go right there to your market analyzer and just add it to your list. Type in what you want and just go ahead and type it in. Now this is interesting stuff, guys, because it's been a huge, absolutely huge month for Dodgecoin. This was one of our picks to click and our picks of the week that came out in the Switch Markets newsletter. If you got that, be sure to open that up, give that video a look. I take about 6 minutes and break down what's going on in crypto. I think it's probably one of the biggest markets this week. You're up about 60% in Dodgecoin this month. These are huge weekly gains, really staggering 3-week gains. And anytime you see a break like this, a bullish break, there's a couple of things that I would really point out. Number one, where are we at? Well, we sort of got a little bit of an order block there, don't we? You can see this order block developed right in here, and then what do you got? Sort of a little bit of stagnation at that juncture. For me, I love Fibonacci retracements. They are my weapon of choice. I know a lot of you love moving averages and different technical tools. You're more than welcome to use anything you like. Remember, if it makes money, it's the right answer. That's all there is to it. So there's a million ways to skin a cat. I like to skin mine using your Fibonacci retracements. I've probably drawn 100,000 of these things on live streams over the last few years. A lot of folks find it redundant and sort of a silly way to approach it. Me, I like to keep things simple, and I like to know what I know. And I know market structure pretty well, and I know Fibonacci's pretty well. Toughest part about Fibonacci's is understanding which waves to draw. I watch YouTube a lot. I watch a lot of folks that say they know Fibonacci's, and the way that they draw them are completely different than me. But if they're making money doing it, I don't argue. I say, good for you guys. You found a new way to do it. For me, this is how I was taught. Most current spike low to most current spike high. This isn't a spike high just yet, but it is an upper extreme. I like the upper extreme. I treat them like spike highs. Your spike will come in if, in fact, you get maybe a next week's open down in here somewhere. I would love to get my 38% buyback right now. I think it's a pretty darn good one. You see right there, 38% is right around about 23, 25, something like that. Now, you can also take this down to a daily chart, which isn't a bad way to do business either. Now, if you're going to use a daily, you can see we've got our big Fibonacci's there on the weekly here for Dodgecoin. But if you're right there, that low up to this high, and these Fibonacci's aren't the best here on MT5, but my point is this: you're going to be somewhere right around that 25 area, 25 flat. And that is the area that we used in the pick to click, the pick of the week. We're right around 25 for your Dodgecoin bid. Really, any reason that I have to join the upward trend, I would be looking to do here with crypto. I think that it's a fantastic opportunity to buy dips. Are we in for a bigger pullback? Maybe. I mean, the only thing I could really see derailing this is just regular price action, normal price action, and pullbacks. But maybe something out of the Fed with potentially I don't know, maybe a surprise rate hike as opposed to a rate cut. But look how active Dodgecoin is right now. Absolutely flying all over. Very, very tight spreads. I mean, you see the spread is essentially nothing, and you got a chance right there maybe to get in and get a pullback right now. I love that 25 area. Big round number, 38% retracement. Not a bad time potentially to be looking at Dodgecoin. So that's sort of where we're at there. Now, as far as Tuesday, Wednesday, Thursday, you guys know me. Y'all know me. You know how I trade. I love Tuesdays through Thursdays. It's pedal to the metal for me. I mean, you see right there DiCaprio and Wolf of Wall Street screaming into the mic. I mean, let's get it on. It is time to trade. This middle 72 hours has always treated me fairly good. Fairly good. Had some challenges on Wednesdays this year. Don't necessarily know why, but this is one of those weeks where I think that your best trading is probably going to be Tuesday through Thursday. It's all systems go. We want to trade our plan and make our money. That's the idea. We don't hesitate on Tuesday, Wednesday, Thursday unless there's a huge economic event. And right now, we've got a wide open economic calendar for the rest of the week. So we're definitely in that happy zone, in that kill zone. And this was a trade idea that I put out earlier today, so I'm going to go ahead and cover this one. It's the Great Britain pound Canadian dollar. It's one that we don't go over very often here, but I do like it as a potential cross pair and an opportunity maybe to get away from the U.S. dollar just a little bit and see if we can't make money trading something else. I like the Canadian dollar. We're going to talk a little bit about that in just a second. Let me see. Angeli, XRP, absolutely. We'll cover XRP right after this Great Britain pound Canadian dollar. Let me see. Jot Singh. Today I read your naked trader strategy. You know, the naked trader is an old one. It's an old one. Admittedly, I'm not an expert in the naked trader, but there are some good things in there. There are some, it's based on the daily time frame, which I'm a big fan of. I like my 920 on the dailies a little better just because you're going to get more entry points, but you've got engulfing patterns and also pin bars involved in that naked trader. It's a very easy strategy to follow, and a lot of people have really done it well. I mean, that was actually the basis for our triple screen trader that we did a couple of years back, showed you how to use all the tools in your MT4. So if you like the naked trading strategy, go with it. There's plenty of content inside of the Trading Room and Trading Academy that deals with the naked trader. It's a little bit dated. Honestly, it was before my time. It was before I arrived here at How to Trade in switch markets, but I won't put down its merits. A lot of people really love it, and we still get inquiries about it all the time. So Jot Singh, if you like the naked trader, go for it. Go with it. All right, guys, trade update, Great Britain pound Canadian dollar. Essentially what we're looking to do with this type of trade is we're looking for a little bit of insulation. We got to get away from Jay Powell. We've got to get away from the scandals, and by maybe not trading the US dollar or maybe backing off of US stocks, we have a chance to do just that. So when I'm looking at something like the Great Britain pound Canadian dollar, I'm thinking diversification. I want to trade something that maybe isn't exactly the same as the US dollar. That's for sure. Let me see. T. Marine, I love the naked trading strategy. It's a great learning start point. It's a fantastic strategy to learn. You learn a little bit of everything. You learn the chart patterns are the biggest thing, and then you also learn your risk management and your risk versus reward, and also you have a couple qualifiers in there. I believe there's a couple filters involved as well. It's a great place to start. It's easy, and I love easy. Easy's better. All right, guys, Great Britain pound Canadian dollar. Essentially what we're looking at here in the thesis behind this type of trade is that the Canadian dollar is showing a bit of strength. And the reason why it's showing a bit of strength is because U.S. oil right now is still right around $65. Now, we haven't had a final resolution in the U.S.-China trade, or U.S.-China, the U.S.-Canada trade war, and that one's developing very quickly. We've got a lot of saber rattling on both sides. Trump yelling at the new guy up there, the new guy yelling at Trump. Essentially, what we've got is sort of a standoff, and Canada's biggest stick. that they can use is energy. It's about 7 to 9% of Canada's total GDP. About 90% of those exports in both natty gas and crude oil go to the United States. So that is going to be where the battle's fought. It's going to be fought in the energy market, especially when it comes to the Canadian dollar and the U.S. dollar. Now, this is a little bit different. This is the Great Britain pound against the Canadian dollar. So if you see WTI in natural gas hold the line, then you're probably going to have a decent opportunity there with the Canadian dollar to gain a little bit on the pound sterling. Now, right now, it's mixed. I mean, we're looking at U.S. oils off about 1%. It's not really a trend day, but the big one's natural gas. Natural gas is down big over the past 2 sessions, and it's right now right around 3.2. And if you remember, I put that trade idea out when it was up around 3.7, and we were thinking about selling 4.5s. So if I lost you, don't worry about it. We just had a trade idea out last week that gave you the macro look at the natural gas market. So the fading action in the energies markets is really why you got this weekly bump right here. This is why we sort of rallied in the Great Britain pound Canadian dollar. Well, really, it was no news out of Britain that would have sent the pound higher necessarily. But right here, what do we got? Well, we got a nice Fibonacci sequence on the weekly. We've got a spike high right there and a spike low. And our trade idea right here is going to be about 185.34. And I believe we were looking at 185.24 sells. Somewhere right in this zone here is where we're looking for a pretty good fight to develop. So we're not there yet. We're down there at about 184.21 or something like that. But we could definitely get there by the week's end. But the price is definitely reversed off of our 13-week moving average. And now we're coming back down. So I'm a little bit further off. I mean, when we put this trade idea out earlier today, we were somewhere up in here, 184.36, 184.40, and I liked our opportunity to get that shot up there. But we're still about 100 pips away from our entry. Do we get it? Don't we get it? That's one of the issues about having to put out trade ideas in advance that are actionable, that are sort of evergreen for a few days. It's a challenge because a lot of times the market goes against us. All right, let's go ahead, Angeli. Let's go ahead and look at that XRP, and then we have another question in there. And then I'm going to get on to, we're going to talk a little scandal here. Let's go XRP futures. Yeah, that reminds me the CME just launched Ripple futures. So there you go. So let's go XRP USD. That'll give us a decent look at what the breakout really is. And you'll notice this is really a lot like Dodgecoin. A lot like Dodgecoin. So if I'm looking at something like this, I'm saying, okay, there's a couple of things that we probably need to do before we really set the stage for our short-term trading. And the first thing is to pull up your long-term levels. Now, XRP has been an incredible fight with the U.S. government for quite some time. All that's sort of gone away now. The litigation, the SEC litigation against Ripple. Ripple won those cases, and that was Gary Gensler. You remember the Biden administration's head of the SEC. That was Gary Gensler's sort of pet. He wanted to nail the crypto industry, and he wanted to start with Ripple and XRP. Didn't happen. Now you've got a different administration in. You've got a pro-crypto administration that wants to boost crypto values at all costs. There's no question about it. We read the story yesterday where the Trump media supposedly had a $2 billion war chest full of Bitcoin. That's an incredible number of Bitcoin. I mean, it really is. And that shows that there's institutional investment coming not just from potentially banks after the Genius Act, but also these companies, these conglomerates are just stockpiling crypto. XRP is definitely one of those holdings. There's no two ways about it. So a couple of things that I would look at here. A bullish bias is definitely where it's at. Right there was your all-time high. There was your spike high right up around $3.40. Now you're up around $3.52. What exactly would be sort of our way forward? What's the easiest way to trade this thing? You want to get long. You want to get long if you can. So if you're trading XRP, you could take it down to a weekly. I love something like this. I mean, this is absolutely fantastic. You could do this sort of in your sleep. You just got to make sure that you catch the top, and if the top moves up, the upper extreme, you just have to do that. Something like this, though, is absolutely great. Buying right around 3, of course, who wouldn't? Let's go to a daily. That's pretty good stuff right there. That gives you a good look at what the market dynamic is on a daily time frame. Spike low there, spike high. There's your pullback. And really, there's your touch up right at 38% about 3 days ago. So I'd be looking at 33.48 as potentially being a downside support. I would love a deeper pullback to 3, and we may get it. Hey, listen, the short-term crypto longs are going to get shaken out. Eventually, we will get a pullback. Now, will it be a big one or a little one? It's going to be big enough to force retail out before we make our next leg up. Essentially, that's how markets work. Run, rotate, run. And usually in the rotation, a lot of retail gets stopped out. So right now, I'm watching this closely. One last thing I'm going to say on XRP. I want to be long, but like I said, we pretty much missed it right there. I mean, that's a good trade. Came across the board the 19th of July, which is a few days back. You want to be long. Do you want to be long from here? No, I don't. I'm not interested. You can see that all-time high level definitely bouncing off of that as support. Maybe that 3.5 area is turning out to be a huge key number. We're just going to have to watch and wait for this to develop. Last thing I'm going to say about Ripple's this. It's a P formation. I mean, that's a textbook P formation, something we use on a 30-minute chart a lot. But run and rotate, essentially it's a bullish flag, a bullish pennant, whatever you want to call it. I call it a P formation because it looks like a capital P in the English language. It's extremely bullish. Run, rotate. Are we waiting for a bullish break? Yep, looks like it. So the longer that we trade sideways here in XRP, the greater chance we have of the market moving definitively higher. Okay, let's see here. We got a question coming on out of the YouTube land here. Let's see. Angeli, off-topic question, but is there a way to incorporate the orb strategy with supply and demand? Yeah, I'm actually working on a video right now about how to improve at least your entry points on the orb. Does it have anything to do with the supply-demand zone? Theoretically, your orb, your supply and demand zones probably would be your key levels that we try to shoot for with our profit targets. So if you had, like, say, a supply zone that was way above your orb, you might be shooting for price to move up to that area. And if you had maybe a demand zone that was way beneath your orb, maybe your lower side target that you may want to shoot for a profit target. So supply and demand definitely is going to impact what we think order flow is going to do at certain levels. And if our orb is really in the center and we have some room to work between supply and demand levels, that's great. If we have an orb that's set up right inside of a supply level or right inside of a demand level, potentially we could still play breakouts, but we may want to play them with the direction of pressure. It's a great observation, Angeli. I hope that helps. But essentially what you want to do is you want to work your charts and you want to understand where those zones are. And I tell you what, we could set an orb up here relatively quickly on. Let's go to the U.S. Let's see. Let's go to the U.S. 30. Not much has happened here in the U.S. 30. Let's go ahead and set an orb up. You see daily, we've went up to 45,000, sort of pulled back, and we're just sort of trimming sideways. I mean, I want to sell 45,000's bad, but I don't think that we're going to get there anytime soon. So here's your orb, right? 15-minute orb strategy. We want to start the U.S. 30 right after that opening bell ding-ding on Wall Street. So you got a 15-minute chart. You're looking for a 2 bars. 2 bars. That's it. 1, 2. So essentially you're working for the top of B period, which that's not B period. B period is a 30-minute chunk, so strike that from the record. But right there you've got sort of the low, that opening 15-minute low and the second 15-minute high, and since then we've traded inside of the entire range. So if we were looking at something like this for a potential orb, you're almost in the position for a late day break. I don't love it. I really don't love it at all. It's really ugly stuff. But if you're talking about a supply or demand level possibly influencing an orb trade, the first thing you would do, especially if you were a ICT trader, somebody that loves order blocks and things of that nature, that area right up there, I guess they call it a liquidity sweep or whatever the nomenclature is. In the old days, those were just order blocks or a value area. We called those value areas. And why is that a value area? Just because there's a lot of action right in that zone. That zone right there would be a demand zone, or excuse me, a supply zone, because there's more sellers than buyers. So if I was interested in that zone, it probably would be a profit target. So if you did break out, you'd be looking to grab a profit target up there. Something to think about. Definitely something to think about. All right, Precious EB, good to see you. Hi, how you doing? Let me see, Dave, F19, good to see you, Dave. Hi, Shane. Please explain why you put the Fibonacci spike low where you did on XRP. Yeah, let's go ahead and do it. Let's see, we just got to step back to XRP. Of course, this is the wrong chart. This is the market cap. Yeah. So if we're looking at spike lows on the daily time frame here, for instance, and I can redo it all for you if you'd like, but this is really gives us a pretty good look at market structure. That right there is a spike. That area right there is a spike. And what a spike is essentially, that's when you've got a price bar that's lower than the previous price bar, and it's also lower than the subsequent price bar. So right there, you've got a low dialed in, and then that low right there is beneath the other 2 lows. It's basically a 3-bar formation. 3-bar formation. So that right there is your spike low. That's sort of the low point of this daily chart. So if I was doing this, I would say, okay, that right there is where the move begins. So what do we want to do now? We want to work towards that spike high or that ultimate high. That's your upper extreme. The idea is to capture the range. Now, you could say, okay, well, do you have a spike anywhere in here? No, not really. Remember, it's a 3-bar pattern. There's bar 1, Bar 2 is going to be beneath that. Bar 3 is going to be above bar 2's low. Relatively straightforward. That's why I did that. Now, what's the idea with what's better, a weekly or a daily? In this situation, we have a market that's trending. You'd want to go to the low time frame. Now, I'm not going to go any lower than a daily because this action right here, immediately I know that on a 4-hour chart it's going to be ugly. And we can pull it up and see exactly what market structure looks like. And it's hideous. I won't say Christmas sweater ugly. I got in trouble for that the other day, but it's bowling shoe ugly. It's ugly. I mean, look at this. There's nothing there to build a Fibonacci on. There isn't. So I would have to step back to a bigger time frame, which would be my daily. And you can see right there, that's sort of that pullback on the 15th of July. That's sort of the beginning of the madness here. And we saw the big run, and then we went sideways. That's the range I want to attack. This move right here. Boom, pullback, bullish break, pullback. Love that range, and that's what I want to base my decisions on. And I would love to do that with the prevailing trend. Definitely want to do that. Hope that helps, Dave. But that's exactly where we went ahead and put it. Should be an interesting rest of the day, though. I'm not seeing a whole heck of a lot out there that I'm in love with. We'll look at gold here in just a second, maybe some crude oil. But we do have some other things that we need to cover here. Week 30, not really a whole heck of a lot here. Monday was quiet. Tuesday, JPL spoke earlier today. We'll go over it in just a second. Wednesday, existing home sales, EIA. Those aren't huge market movers. For crude oil, the EIA crude oil stocks number will shake up the crude market. Thursday, ECB interest rate decision. I mean, euro, it's going to be all things euro. We'll talk euro, yen, euro, Great Britain, pound. We'll talk all of those on Thursday. But as far as I'm concerned, the ECB is supposed to hold interest rates static. That's probably exactly what's going to happen. It's exactly what's going to happen. You're welcome, Dave. Absolutely. Thank you for asking. Like I said, guys, you have any questions at all, fire away. That's what I'm here for. I'm here to answer questions and give a little commentary and a few trade ideas. As far as Thursday's trade, definitely Eurocentric. We might even be looking at some of those European indices, really whatever you guys would like to look at. And then Friday, durable goods. Durable goods is going to be interesting because we're thinking recession. A lot of us are thinking recession. I'm not sure that we're going to get it. I really had a rash of pretty good economic numbers. Durable goods is going to give us an idea of where consumption really lies, and that is going to be hugely important. That's hugely important for a couple of reasons. The first one is when consumption dies, you typically go into a recession. Why? Because the money's not coming out of the consumer's pocket or off their credit cards and going into the system, and it's really hard to grow an economy when nobody's buying anything. Durable goods are a big deal because they're a little bit bigger than your CPI stuff. What we're talking about with durable goods is washing machines, appliances, things we typically have to finance for a few months. That's key. Durable goods is key. You definitely are going to want to watch that on Friday, and we'll be all over it, up and down and sideways. Gordon Williams, hello from Dallas, Texas. Thanks for joining, Gordon. I'm not sure if you're a football fan down there, but most, let's see, Dallas would be Cowboys, home of the Cowboys. That's for sure. Let me see. Precious Evie, please explain, why do pullback happen and using U.S. oil as a case study? Yeah, I'll go ahead and cover U.S. oil here in a second, Precious. It's a good question. Why do pullbacks happen? Pullbacks happen because it's the natural way of things. There's no big mystery at what goes up, what must come down, what goes down must come up. The thing is how far do these things come back? Price doesn't move in straight lines. You know, there was an old movie with Tom Berenger. It was called Marine Sniper. It was just Sniper, but it was based on a book called Marine Sniper, and he was a sniper for the Marines. And when he was hiking through the bush, they would change directions all the time, and his first lieutenant said, "Hey, we're not going west anymore." And he goes, "Yeah, we don't go in straight lines." Price doesn't go in straight lines. It moves directionally, and then it pulls back, and then it goes sideways, and then makes another move, sometimes against the trend, sometimes with the trend. I'll show you on U.S. oil here in just a second. Good question, though. Why does it happen? Because price doesn't move in straight lines. If it did, we'd all be rich. We'd get in on the moves, and we'd all be retired by now. In any case, that's sort of our slate for this week. Remember, a lot going on here, a lot going on this week, and the economic calendar is not going to say much. Fed Chair Powell Speaks. That was sort of the big event that didn't happen today. It was a nothing burger. It didn't mean much. He didn't say anything regarding the economy. He didn't say anything regarding his scandal right now. Didn't really say anything other than we need big banks to provide liquidity. That's what he said. So he was doing a lot of handshaking and public relations. I told you that he's already looking for his next job. And today he spoke at a big bank symposium, something like that, huge lenders. It was for bigger banks, though. I can't remember the title of it, but it's out there somewhere. And the idea was, hey, you guys are great. If anybody need my services, I'm going to be maybe open for business here in T-minus 6 months. But that's basically what he said. It was a public relations thing. So not really, it was a nothing burger. It didn't mean anything. As far as what we saw here, Fed Chair Jerome Powell speaks at large banks conference amid Trump criticism. Treasury slip with Fed's Powell set to speak on regulation. That was, that's Treasuries didn't slip much. That's a headline. That's a clickbait headline. Bloomberg knows that too. The market didn't move that much. And then Business Insider, why some economists think Powell should resign to save Fed independence. Business Insider, sort of an interesting outfit. I was actually in it a few times. So if you want to Google Shane Vernier, Business Insider, I've got 3 articles in there on Fibonacci trading and gold trading and things, oil trading. So you want to check those out. If you don't get a free trial, though, don't buy it. They stuck it behind a paywall, so I wasn't real happy with that, but that's life. That's the way it works. As far as what else can we really say, this is it. This is Jay Powell, and the bottom line is this. I mean, the gentleman's under fire, and this is a fascinating article here. We're going to go over some of the high points just because it makes me laugh. Besant says Fed Chair Powell doesn't need to resign but should conduct an internal review. And then you got the next right over here. This gentleman's always on the news. Mohammed El Arian breaks ranks with Wall Street and says Powell should resign. So you've got everybody with their own opinion. Jay Powell himself has said that he's not going to resign. We're going to look at some of the odds of that in just a second. But this is pretty good. Scott Bessent, remember, Treasury Secretary under Trump. There's nothing that tells me that he should step down right now. He's been a good public servant. He's been a good little guy. He's followed orders, right? Till now. He's not following orders now. Interesting stuff. Let's see. A day after calling on CNBC for an examination of the Fed's entire operation, Bessent said that doesn't mean the central bank leader should step down. I know, Chair Powell. There's nothing that tells me he should step down right now. He's been a good public servant. But here's what I'm talking about. And this is why everything these guys say is veiled. His term ends in May. If he wants to see that through, then I think he should. If he wants to leave early, I think he should leave early. What is that? That's like talking to the Godfather. He says, well, maybe you should go on vacation. If you want to go, you should definitely go. This right here is loaded. They want him out, and they want him out bad. The big real scandal that's going to end up in front of Congress again is the $2.5 billion building renovation that's $700 million over, and that's got a criminal referral on Jay Powell from the House of Representatives. Will it go anywhere? I highly doubt it, but it is pressure. It is pressure. So really a lot going on here with Jay Powell in the scandal season. What does that mean, though? Polymarket, one of the world's biggest really gambling websites on politics and on really anything under the sun. You buy shares of these things, and you can see exactly what they think over at Polymarket. Is Jay Powell out in 2025 by December 31st? Only a 20 cents say yes, buy no, 81 cents. So about 5-1 odds say that he's out. This is sort of interesting. I was calling for him maybe this week to step down. Buy yes, that's only a 1% chance. Interesting. Could happen, couldn't happen. I would highlight, it's tough to really predict when these folks are going to announce that they're leaving. My guess is he's going to announce that he won't really want to be, he's going to retire from the Fed. When's it announced? Maybe later this year, August 31st, 6%, December 31st. It's not going to cut interest rates next week. It's not going to cut interest rates next week. That's not going to happen. That's going to bring even more heat and more fire towards Jay Powell. Does he step down? I think that there's a chance that he'll resign if Congress moves on potentially filing some formal charges against Jay Powell in some sort of capacity. It won't be embezzlement or anything like that. It'll be, it won't be dereliction of duty or nothing like that. It'll be probably something like misappropriation of funds potentially. It'll be a soft sell. If that looks like it's going to come to fruition, he's going to step down. Now, when? I don't know. By the end of the year, I like that 5-1. I think that's pretty good. Now, the other thing that Jay Powell could do is he could start cutting interest rates. If he starts cutting interest rates, all this goes away. It's going to flare up again next week when they don't cut interest rates at the Fed meeting. I'm going to have FOMC Live for you next Wednesday. Be sure to tune in. I can't wait. I'm going to be like, it's going to be fantastic. I'm excited. I'm going to have the popcorn out and just ready to break down what exactly Jay Powell says, because it really is a scandal. And remember, you have 3 scandals going right now. You've got Epstein, you've got Powell, and now you've got the one with Obama and Obama officials. Election tampering, supposedly. That one's starting to catch steam. Trump was calling for indictments earlier today. It's the first I've heard him ever call for indictments like that, especially over another political figure, a previous president. It's all unprecedented. No pun intended. So I don't really know what to say about all that, but I will tell you this: it all has an impact, and it's all hooked together. So I'm watching the news closely. Okay, let's go ahead and take a look at it. I want to answer this question. Precious EB, explain why do pullback happen using U.S. oil as a case study? Well, I mean, there's lots of reasons for a pullback. We could say there's fundamental reasons, meaning there's a supply-demand issue in oil. And like, let's say we have a big supply, a big run of supply, or maybe the expectations for less demand, and that's going to bring in swift selling. So you would say that right there, what developed on June 23rd, would be a pullback. That was fundamentally driven. If you remember, we had a bit of a market panic back then and an incredible crash in the crude oil market. So this would be a textbook fundamental pullback. Now, the other one's a technical pullback. Now, a technical pullback for me are the kind that I like because there's nothing really huge that's driving them through the levels. The technicals, during a fundamental market rush or something that's really sending the market trending and plummeting, I mean, that was a 9% loss on June 23rd in U.S. oil. That's a huge pullback, right? Typically, when you're in that kind of a situation, your levels don't mean anything. The price blows through them, especially if you're using Fibonacci's or moving averages or anything. Price just freight trains them because it's being driven purely by order flow, and it's being driven purely by market sentiment. The rest of it doesn't matter. The technicals do not matter in that situation. But the rest of the time, the technicals matter a lot because they're actually fairly accurate in giving us measurements on where price may turn or may reverse course or may extend. So the first thing I would say about why do pullbacks happen, fundamental events can force a market reversal. They can force a bullish market reversal or a bearish market reversal. The second thing would be the technical issue. Now, you say, Shane, what's a technical pullback? A technical pullback's natural, meaning this is a great example using U.S. oil. This was back in May. What do you have right here? You got a pretty darn good rally off of our test of 55, somewhere right down in here. We had this situation set up back in April. That was right after your tariff craze where you got just a crazy, absolutely crazy run on tariff fears, established the swing low, the yearly low down at 55, and then we tested this again. Well, this is interesting right here because pullbacks are natural. I mean, when a market gets, a certain amount of bullish or bearish sentiment, typically somebody's willing to take the other side of the bet, believing the market is overbought or oversold. That's exactly what you saw here. You had a nice big 2-day rally of about 5%, and on the third day, what happened? You pulled back 2%. Why? Because traders, believed that, this market's overbought a little bit. Let's take a short and see what happens. Well, take a look at that daily high right there on May 7th, 60.22. What do you think happened? What do you think the key level was? It was 60. Market absolutely banged off of 55, went up. What happened right there at 60? Came off. What happened the next day? Started a rally. Rally. What happened again? Retracement. Essentially, it's the crux of the Elliott wave where you've got ones, threes, and fives move. So like that would be a 1, that would be a 2, that would be a 3, that would be a 4, that would be a 5. And the idea is that your 1s, your 3s, and your 5s, I can't draw with this thing, are the movers, and the 2s and the 4s are pullbacks. Essentially, that's Elliott wave in a nutshell, and the idea behind that is nothing goes in a straight line. Always remember there's buyers and sellers in the market, and some days the buyers win, some days the sellers win. Some years the buyers win, some years the sellers win. And all of that really factors into price action. And that's the beauty of price discovery, and that's what we try to capitalize on each and every day. Are the buyers and the sellers in balance? Are they out of balance? Is price in a state of equilibrium, or is it ready to move? Or is it on the move? Those are questions we ask ourselves every day at every chart we look at. So if you were looking at U.S. oil right now, what could you really say about it? Number one, it's not pretty. I mean, it's not a fun market to trade right now. To be honest with you, I'm pretty bored with it. I want it to move. It's not moving, though. So if I was trading, I'd be looking at that spike low back there that did develop 24th of June. Your low right there, 64.03, probably going to be decent downside support. Do you want to buy it or sell it right here? Take a look at your negative days. 1, 2, 3, 4, 5, 6. Plus you had a little bit of a gap down there. Not a true gap, but a negative open there to open the trading week. What would you want to do right now? If you believe in retracements, you would just try to buy it and get a bump, right? I don't do that. I wait until we get to a key level. I think our retracement probably bounces off of 64 somewhere, maybe 65. Tough to say. Right now, I would be looking to sell the top side of my retracement. So something like that. There's your spike high. There's sort of today's lower extreme. As long as that low holds down around 64.82, then we could definitely be looking to sell 66, 66s. Nothing wrong with that at all, or maybe 66.50s right up in this vicinity. If, in fact, we do extend the market extends, and our Fibonacci's, of course, just move with the market. But if we come down here to the 64 level, if I was going to play and bet on a retracement or a bounce, as we like to call them, maybe we get a bounce off of 64 even. Could definitely be there. Something to think about there. I hope that answers your question, Precious. Hope that's good. I think he's leaving. T. Marine, I think he's leaving. Think Jay Powell's leaving by the end of the year. I think so, too. I think he'll announce it. I think he's going to announce it after the July meeting. I really do. Cut his rates on the way out. I don't know. I don't know that he does it. I think it depends on what the next job is. I mean, if Jay is going to go to work for Goldman and Sachs, sort of like, Henry Paulson wasn't a Federal Reserve governor. He wasn't a chairman, but Paulson was high up in the monetary system in the United States back before the big crisis, and he went to work directly for China, interests in China. So I think Jay Powell's going to do whatever his next boss thinks that he should do because there's too much money at stake. There's too much money at stake. And he'd probably yell at me and get angry at me for saying so, but you know what? He's a public servant. He's being paid a lot of money to do that job, and you know what? If you don't want the criticism, don't take the job. That's the way it is. Let me see. Gordon Williams, Dallas Mavericks. All right. Right on. Angeli, maybe you can do a video on the Elliott Wave. I've never heard of that before. Yeah, we've done a few. Elliott Wave's a real popular way of trading. I've actually made a few shorts on the Elliott Wave strategy, so check those out on Forex Signals. Just go there and Google Elliott Wave or just run a search Elliott Wave, and you'll see the videos. They're essentially the basis behind Elliott Wave was ICT before ICT was cool. Everybody was into Elliott Wave back in the day. They all believed in it. To me personally, I've seen the waves break down in too many instances, but we got some great wave traders at How to Trade that know their stuff and they know how to trade it. Okay, guys, a couple of 920s, and then we're going to go ahead and get out of here. This is the 920 EMA crossover. We're going to go ahead and cover this tomorrow in our Switch Markets live workshop. So if you're watching us on How to Trade Column YouTube channel, this one will be live exclusively on Switch Markets YouTube or in the How to Trade trading room. So you're going to have to head on over there to check it out. But I'm just going to do a basic 920 webinar, and we're going to show you how to set it up and get it going. This right here is your 920, our coded version, and you've got that 9 that crosses underneath the 20, and that purple bar right there is your sell. This is the dollar yen. We had a lot of action here in the dollar yen, and there's a lot going on here. But that sell right there from 147.48. Pretty darn good. You're about 100 points up. I would say that, or 100 pips up, excuse me. Stop loss needs to be right in here somewhere. You could definitely bring it down right now if you wanted to. I'd probably leave it right above that swing high right in there somewhere. Right at 148.94. And if you sold 147.48 and you're looking for at least a 1-to-1 ratio, you've got about another 50 pips to go before you get paid off here. Pretty good trade, though. Pretty darn good trade. You're deep in the green, and this market is definitely trending. Gotta love the dollar yen. Let's look at one more yen pair because it is on the move. Great Britain pound, Japanese yen. 920 crossover, and there it is again. So this is sort of one of the dangers where a lot of folks will trade all things yen, or they'll trade all things euro or all things US dollar. And what happens is you just start getting signals, the same signal over and over again. The signal right here, pretty darn good one. We had sort of a massive drop here in the last 4 hours, or about 8 hours ago, excuse me. And it really was a nice dump. So that trade right there is relatively profitable as well. Pretty darn good move there in the guppy. As far as what time frames I would be using the 920 on, we're going to go over some real short time frames tomorrow, do some scalping. If I'm trading Forex pairs, 920 crossover, 4-hour chart's a pretty darn good place to begin. Now, it's not foolproof. You can see right here, this bid right there was a loser. This sell right here was a loser. You got chopped up. But once you step in there and you get a good move, a big move, you're in position right here to get a significant move here on this yen, on the yen getting a little strengthening. So that's what I'd be looking at there. As far as the 920 and your yen pair. So I hope that helps. We had a couple questions about the yen. All right, everybody, I'm going to go ahead and sign off here tomorrow, about 23 hours, 16 minutes, 30 seconds. We've got Switch Markets webinar, 920 EMA crossover. That'll be live on Switch Markets here on YouTube, and then also inside of the How to Trade trading room. As always, cruise on over to How to Trade. Feel free to send me a private message with any questions you may have, or just leave them beneath the live stream. I answer them all every day, so I'll be sure to get back to you. It's all about interaction and trying to help folks develop as traders. One of the ways that we've tried to do that is propose a lot of different strategies and help you pick one that maybe is suitable for you. Remember, there's more than one way to skin a cat. If you love the orb strategy, that's great. If you love crossovers, that's great. If you trade Fibonacci's like I do, that's great. If you like Elliott Wave, there's nothing wrong with any of it. You just got to figure out a way to balance risk to reward and make it work for you. And we put a lot of trade ideas out also on how to trade. You get several per week. Feel free to tune in. So right now, guys, it's all about scandals. Scandal, scandal, scandal. And one scandal's feeding the other scandal. And like I said, we're going to have the popcorn out for the next week or so because, there's a chance that heads are going to roll. And I don't know that Jay Powell steps down, but Jerome Powell out as Fed chair in 2025. You're giving me 5-1 on that? I think I'll take that action. That's some pretty sweet action. 20 cents to win $1. I'll probably take that. Why not? We got time. We got time till Christmas. All right, absolutely. You're welcome, Eli. You're welcome, Angela. You're welcome, T. Marina. Always a pleasure, Bobby Bob. Any questions at all, be sure to head on over to How to Trade. Dial me up. I'll get right back to you. You guys have a fantastic trading day. Remember, live webinar tomorrow. We're going to do some trading. It's going to be a lot of fun, so be sure to stop by. Last one, a lot of folks have visited, so be sure to check us out over there. All right, guys, have a fantastic trading session. Trade the action well, and we'll talk soon. See you.